Okay, gentlemen, so I want us to take a look at task 6.6. Task 6.6 is on page 88 of your new area accounting for grade 9 learners book. Okay, so in your textbook, page 88. Okay, we're going to be looking at both D traders. This is the CJ and CPJ and general ledger. So the creditors journal, cash payments journal, and general ledger. Okay. So basically, I'm not going to look at the entire task. The things that I'm more interested in is putting the opening balances in our general ledger and posting from the cash journals to the general ledger rather. Okay, so I just want to read though for you just as a recap. Okay, you provided with the information relating to 40 traders for March 2008. Okay, so you're required to prepare the creditors journal, and there it is in front of you. Okay, and then you prepare the cash payments journal. Okay, and there's the cash payments journal. Okay, and then finally you post it to the general ledger. Okay, so before we post to the general ledger, let's first have a look at the balances at the beginning of the month. It says at the beginning of the month there are two credit suppliers to whom they owed amounts. So Marco Wholesalers 7,500 and Kandor Limited 8,300. So those are the amounts that were owed, okay, to the two suppliers. So basically our creditors control balance is those two balances of 7,500 and 8,300. Okay, but before we get there, let's start off with the bank. It says that the balance sheet account section, the balances were, bank was 51,000. Okay, so as you can see, March the 1st, the balance brought down was 51,500. Okay, we've got it on the debit side because bank is an assets, and assets have positive balances on the debit side. Okay, and then we look at equipment, the second one, again on the 1st of March, we've got a balance brought down of 11,000 of equipment. Again, that's also on the debit side because equipment's an assets, and assets have positive debit balances. Trading stock, trading stock is also an asset. Okay, so we also expect it to have a balance brought down on the debit side or the left hand side. Please note here, gentlemen, you've got your March, your month, your day, your balance brought down. Under the FOL, the folio, you've then got the BD brought down and then the amount of 56,900. Your creditors control has got a balance of 15,800, but now we know your creditors control is a liability, and therefore if you go to your creditors control, the balance brought down 15,800 will be on the credit side because it's a liability. The last balance that we have, or rather total, because it's in the nominal account section, therefore we say it's a total brought down, not a balance brought down, of 2,200 of stationery. Stationery is an expense. Expenses are positive balances on the debit side. Okay, so we've now put in all our balances, okay, in our general ledger. Consumable stores didn't have an opening balance. Okay, if we now go back to the creditors journal in front of us, we know that we need to post 1, 2, 3, 4, 5, and possibly 6, 7 amounts that need to be posted. We start off on the far left, gentlemen, our creditors control. We have to go post this amount of 35,110 to our creditors control accounts in the general ledger. Does that make sense? Okay, so if you look at your trading stock, the exact same principle applies. You post your trading stock amount of 31,300 to your trading stock accounts in the general ledger. Again, 1,200 of equipment needs to go be posted rather to your equipment accounts in the general ledger, and so does stationery, and so does consumable stores. Okay, so let's start off by looking at your creditors control. Let's take that to the creditors control section of the general ledger. We know our details are going to be sundry accounts because it's a mixture of all these accounts, but let's just go have a look, see. Okay, there you go, creditors control. Okay, on the 31st, it's on the credit side because it's a liability and liabilities increase on the credit side. We call it sundry accounts, and it's the cash journal 3. That's our folio because that's where we got it from. We got it from the cash journal 3 right there, top right hand. Okay, so if we go back and look at our creditors control amounts, okay, it's 35,110, and that's it. You've posted your creditors control accounts onto your creditors control ledger. Okay, so let's go have a look at the second thing. Now we need to move trading stock. Trading stock of 31,300. Now trading stock, as we said before, is an asset, so we know it's going to go onto the debit side of our trading stock accounts before we bought this trading stock, we had to put it into our creditors control. So we increased our creditors control, okay, by 5,300, and then our trading stock went up by 5,300. Basically, we owe 5,300 more, okay, and therefore when we go into our equipments, okay, we'll then have a look at our equipments debit side, okay, because equipment is an asset, it goes up on the debit side. Got it from our cash journal 1,200 rand. Okay, we bought equipment and that amount went into our creditors control, which basically means that it increased our liability. Our creditors control has gone up. We now owe 1,200 rand more on our creditors control. Okay, gentlemen, moving on swiftly. Okay, let's look at stationery. Okay, that was actually trading stock, sorry. We've looked at equipment now. Let's look at stationery. Same thing will apply. Stationery is an expense. So we'll go to our stationery account on the debit side because expenses increase on the debit side. We call it creditors control because it increased our creditors control and was an amount of 1,670. Okay. Lastly, we look at consumable stores. Now remember, anything that happens in the sundry section, okay, on the right hand side, we go post it on the specific day that it happened. So we got consumable stores on the 7th and consumable stores on the 13th, okay. So we're going to post them separately. This 340 and 600 will be separate amounts under consumable stores. So there you go, okay. Consumable stores is an expense. Expenses go up on the debit side. That's why we posted it on the debit side. It happened on the 7th and the 13th. Creditors control because that's what went up. We took it from our CJ3 and there the amounts of 340 and 600, which is 940. We've basically now, gentlemen, posted everything from our creditors journal, okay, onto our journals. The second part of this exercise is obviously to now post things from our cash payments journal, okay, into our general ledger. The same principle applies. You write your extended accounting equation somewhere at the top where you know your assets plus your expenses plus your drawings are equal to your capital plus your income plus your liability on the credit side. Okay, so cash payments journal, we're making payments. Okay, so when we go and post this amount of 39,360 into our bank, we know that it decreases our bank because we were making a payment. If our banks and assets go up on the debit side. If they decrease, they must decrease on the credit side. Okay, so there you go. On the credit side, on the 31st, we call it sundry accounts because it's a mixture of a lot of accounts that have been we've paid for. Rather, our CPJ3 is where we got this amount from, and it's 39,360 as indicated here. 39,360. Okay, our trading stock, cash payments journal. So we paid for our trading stock, but now we're paying by cash. Okay, so our details will now be bank. Okay, creditors control of 37,150, which means we are paying back these people. We've paid back Kando, we've paid back Marco, we've paid back KZN Supplies, and we've paid back Kondo another amount of 20,000. So we basically paid back 37,150. Okay, so when you take it to our creditors control, which is a liability, it's now going down this liability. So we're going to put it on the debit side of the creditors control. But before we go there, let's go to our trading stock, 1,900 rand. Okay, trading stock, 1,900 rand. It goes up on the debit side because it's an assets, and we got it from the CPJ3. Okay, and then what I was talking about, the creditors control, 37,150. Creditors control, we said it's now going down. There you go, on the debit side. Liability goes down on the debit side. Okay, money went into our bank accounts, obviously, or we took it from our bank account to pay CPJ3, and it was amounts of 37,150. Okay, and then finally, stationery. Okay, we bought more stationery, cash payments journal for 310 rand. Okay, stationery goes up on the debit side. Okay, there you go. Bank, 310 rand is CPJ3 on the 31st. Okay, because it's an expense and it goes up on the debit side. Okay, gentlemen, so I hope you now understand with task 6.6 of how to post the creditors journal and the cash payments journal into your general ledger. The biggest secret, I guess, is just to understand your accounting equation. And once you understand your accounting equation, you can then decide, does it go on the debit or the credit side? Is it going up or down? Thank you.